Hey South Carolina Midlands, welcome to the fourth quarter of 2021 and the October real estate market report for the South Carolina Midlands. I am so excited to have you here and tell you about what's going on in real estate, both on the national level and on the local level. My name is Sean Nichols. I'm a realtor with eXp Realty here in the Central South Carolina Midlands, and I'm here to give you an update about all that's going on with home prices, inventory levels, and interest rates, as well as what all of these things mean for you as a home buyer or seller. And stick around to the end of this video because I'm going to be featuring the most expensive and cheapest homes that have sold in our area in the month of September. But before we jump into the video, if you could do me a favor and hit that like button for me and show me some love for all the research I had to do to bring this video to you. And if you find this information helpful, if you could subscribe to the channel, it would be greatly appreciated. But let's go ahead and jump into these numbers. So I'm going to start today with an update on pricing, and I want to begin with this quote from Bill McBride from Calculated Risk. It says, "My sense is the Case-Shiller national annual growth rate of 19.7% is probably close to a peak, and year-over-year price increases will slow later this year." So what does that mean? Because it sounds like he's predicting that home prices are going to fall. But that isn't really what he's saying at all, and I'm going to explain why. But let's start with a look at the July 2021 year-over-year home price appreciation across the country. This is the latest data we have back in July, and the FHFA is showing that home prices have appreciated by 19.2%. CoreLogic is showing a year-over-year appreciation of about 18%, and S&P Case-Shiller Index is showing that 19.7%. So this is dramatic. This is an incredible home price appreciation all over the United States. And as we look at this, it's largely due to supply and demand. We simply do not have enough homes on the market for the demand from buyers, and that causes home prices to rise. But as you know, real estate is extremely local, and what happens on a national level isn't always reflected in the local market. So if we take a look at home appreciation here in the South Carolina Midlands, which includes both Richland and Lexington counties, we can see that the Midlands median sales price grew by about 13.1% year over year. That's still a huge difference, but it's nowhere near as high as it is nationally. What this means to you is that as a homeowner, your home is worth 13% more this year than it was this time last year. So a home that sold for $209,950 last year would actually sell for about $237,750,000 this year. Now, what we're starting to see is a forecast going forward and what experts are projecting going forward, and that's where I really want to shed some light on this conversation. And I'm going to start with a quote from Ivy Zelman. It says, "Closings are set to decline roughly 10% year over year in the second half of 2021. Now remember, this quote is back from July. And home price appreciation is on the cusp of flipping to a decelerating trend. So what does this mean? I want you to hang on to that word decelerating for a moment, because that's where we really need to provide some clarity. When you think about the word decelerating, you're probably immediately thinking about depreciation. But hear me loud and clear when I say the experts are not projecting depreciation. What experts are projecting is increased home price appreciation, just at a slower or more moderate rate. So that's where we're decelerating. That's where decelerating comes up in the conversation. And it's really mission critical to understand the difference between depreciation and deceleration. Depreciation is when a home price goes down, but deceleration just means they won't be going up as quickly. So let me show you what that means. This is the estimated home price performance, and it's from the Home Price Expectations Survey. What we can see right here is that through the rest of 2021, home prices are expected to increase or continue to increase at a rate of 11.74%. So that means continued appreciation. And what we also see is that it's not as massive as what you would have seen over the past year with that 18, 19, almost 20% appreciation. So a more moderate pace throughout the rest of the year. And going forward, as we look at 2022 and 2023 and beyond, we're seeing continued appreciation, but at a more moderate pace. 5.82% for 2022 and so forth. So that's what it means when they're saying prices are not expected to decline. They're just expected to appreciate at a much slower pace. So let me break that down a little bit further. This is the expected home value change, and this also comes from the Home Price Expectation Survey. So you saw that 11.74% appreciation for 2021. And if we average out the 5 years that I just showed you on the previous slide, the annual average through 2025 is about 5.7%. Now we know that the historical norm for home price appreciation has been around 3.8% per year. But that historical norm has even bumped up to 4.1% due to the price appreciation we've seen over this past year. So even the historical norm is climbing. And then cumulatively through 2025, home prices are expected to appreciate 31.8% if we add that up for the next 5 years. So home prices are definitely still rising, again, due to that supply and demand, and not expected to decline. This is important to you for a number of reasons, especially if you're thinking about buying a home in the next few years. I've talked to tons of buyers who tell me that they are waiting for home prices to go down. But according to all the experts, we aren't going to see these home prices come down at all. And they're just going to keep going up at a more normal rate instead of the expanded rate that we've seen. So I don't know if you've heard the old saying, but the best time to buy a home is 30 years ago, and the second best time to buy a home is now. That still holds true even in today's market that has seen unheard of amounts of growth over the previous year. Now, the other big story is interest rates. No doubt we're starting to see some movement in interest rates for a lot of different reasons. But I wanted to talk to you about that for just a minute. And certainly I'm not here today to say the sky is falling and interest rates are about to shoot up. But I did want to give you a look at what interest rates are doing so that you can be educated on this topic. First, a quote from Ali Wolf: "The single biggest risk to housing is rising mortgage rates. It's a real possibility the next year and could bring prices down. Furthermore, other economic and financial confidence challenges could also result in a drop or flattening of home prices. But a drop or flattening in home prices is a far cry from the crash we saw during the Great Recession." So Ali Wolf is saying, you know what? The biggest issue, the frenzy in the housing market could be rising interest rates. It's going to be more expensive for people to borrow money. Right now, the 30-year fixed rate just jumped up to above 3%. You see right here, 3.01% as recorded by Freddie Mac on their weekly survey. And that jumped up as they're starting to see indications of the Fed saying, we're going to taper soon. That's the word that they used. As a matter of fact, here are the latest projections in interest rates from Fannie and Freddie, MBA, and the NAR. And you can see somewhere around the middle of the third quarter of next year being about 3.5%. So we're just right at about 3% right now. 3.5%, if we want a visual for this, we've got to take a look at Freddie Mac's visual right here. You see the drop in rates through the pandemic and starting to inch back up. Freddie Mac saying by the third quarter being around 3.7%. Now, I don't know, I'm not here today to say this is where interest rates are going to be. I don't think it's going to be 4% and probably not at 3.25%. Somewhere in the middle there, call it 3.5, maybe a little bit more than that. But no doubt interest rates are going to rise. Now, if we take a look at this picture, just the slight increase in interest rates can make a huge impact on the amount of money you would be able to spend on a home. Now, if you take a look at this picture here, just that slight increase in interest rates can make a huge impact on the amount of money that you would spend on a home. If you look here, if you've got a $400,000 loan, and if you got an interest rate of 2.75%, which we've been at for a while now, that payment is about $1,600. If we go up to 3%, that payment jumps up to $1,686 per month. Well, if interest rates go up in the next year, getting close to that 4%, that rate now allows you to buy a lot less home. Now, I don't want to scare you into doing anything that you do not want to do, but I want you to see how much those rising interest rates are going to cost you if you decide to wait a year. If you take into account that home prices are still going up over the next year, you can start to see that how if you're thinking about buying, it would be much better to buy a home now than it would be for you to wait a year. Now, we spoke a little bit about supply and demand causing rising prices at the beginning of this video, but I want to go ahead and show you what's going on specifically in the South Carolina Midlands market. Again, that's Lexington and Richland counties. This here is a basic overview of what's going on in the market, but I want to dig into some of these stats a little bit deeper and explain what's going on here and what it means for you. As we've already mentioned, year-over-year price sales have gone up just over 13%. But what's causing that is, again, that low supply of homes. And if we take a look at the number of new homes that came on the market in September, it seems like a good sign. I mean, last year in September, there were around 1,451 homes listed for sale, and this year there are 1,575. And that's about an 8.5% increase in the number of homes listed. But we have to remember last year was not a normal year. And as more people get vaccinated, we will see more and more homes, more and more sellers begin to list their homes. But we're also going to see an increase in that buyer activity. So if we take a look at the number of pending home sales or the number of homes that went under contract, we're actually up 14.1% year over year. So even though we've seen an 8.5% increase in listings, we've also seen a much bigger increase in buyer demand. This is even further supported by taking a look at the number of days on market for the month of September. As you can see, in September last year, the average number of days it took for a home to go under contract was 41 days. That number has dropped by over half to 19 days. That's just crazy that the average home goes under contract in 19 days. And many of the hottest properties go under contract within just a few hours. That's a big reason I tell my buyers not to even waste time looking at homes online, because by the time you see them, they are already gone. That's why I've been doing my Dream Home Finder program to help my buyers find properties that aren't listed on the open market so that they don't have to compete with this crazy buyer demand right now. And if we take a look at month's supply of inventory, which is a metric that we use to combine supply and demand, what this chart is saying is if no one else put their home on the market after the end of September, how fast would we run out of houses? And if we're looking at a healthy, balanced market, we would have about 5 to 8 months worth of inventory. As of the end of September, we are down to only 1 month. So if no one put their house on the market after the end of September, we would run out of homes by the end of October. I wanted to show you one more chart here, and this is a big one if you're actively out there making offers on properties. Many buyers believe that the list price is a starting point and that they can or should negotiate down from there. But as you can see here, the average percent of list price received is actually 100%. That's actually down from where it was in May through August, where the average accepted offer was higher than the list price. But as of September, homes are being sold for an average of exactly what the seller is asking for them. That's important to remember if you're trying to buy a home and making offers well under the list price. It's highly unlikely that a seller is going to accept that offer. So when we break down all of these numbers, it's obvious to see why home prices are climbing so quickly and will continue to climb over the next year. This is obviously great news for sellers because they will be making more money selling their home. But the reason most homeowners aren't willing to sell right now is because if they did, they would have nowhere to go. It obviously wouldn't make sense to sell your home for top dollar just to pay top dollar for your next house. That's why I started the Dream Home Finder program here in Columbia, so that my buyers can find off-market deals where they can sell their current home for top dollar and find their next home without even having to compete with the increased buyer demand. If you want to check out a video that explains how we do that, you can do that here, and I'll also put a link to the video in the comments. But before I ended the video, I want to show you this $2.2 million home that sold last month in Lexington. Now, I don't own any of these photos, and this isn't one of my listings, unfortunately. But this stunning 4-bedroom, 6-bathroom home is 4,712 square feet with 650 square feet of waterfront and even its own airplane hangar. This home is absolutely beautiful, and I am super jealous of the new owner. Switching directions to the least expensive home that sold last month, this 2-bedroom, 1-bath home in Winnsboro sold for $12,748. Hey, don't go yet. I just wanted to take a quick second and tell you thank you for watching this video all the way to the end. As I'm sure you know, I'm a real estate agent with eXp Realty here in the South Carolina Midlands. So as much as I love creating YouTube videos and providing valuable information to everybody out there, I'd love it even more if you would reach out to me with a real estate need. If you've got a friend or family member that's thinking about buying or selling a house in the near future, send me a text with their information so that I can help them out, and then share these videos with them. If I can ask you for just one more favor, hit like on this video so that YouTube sends it out to more people, as well as hit the subscribe button so that you know when I'm coming out with more content. That's really all I had for you. If you liked this video, here's another one that you might enjoy. Again, like, subscribe, share. My name is Sean Nichols with eXp Realty, and I'll talk to you later. Bye-bye for now.